Hello everybody, this is Opeyemi. Welcome to my Forex trading course, lesson 8. If you can remember in lesson 7, we talk about the different types of analysis. That's the Forex analysis. We talk about the technical analysis, talk about the fundamental analysis, and the sentimental analysis. We said technical analysis is the using of charts, the Forex charts. The using of charts to take a decision on whether to buy or sell. He said fundamental analysis is the using of the economic performance of countries. And you know that the stronger when an economy is okay, when an economy is good, their currency will be good. So that will affect your decision whether to buy or sell. So we talk about that. Then we also talk about the sentimental analysis. So sentimental analysis represents the behavior of the market participants, of the traders in the market, which you will also see in the chart. Like my mentor used to say everything is plotted in the chart. Everything, fundamental analysis, everything that happens as a result of fundamental analysis and technical analysis, everything will be seen in the chart. You will see everything in the chart, which is sentimental analysis. Behavior of traders, behavior of participants. Now, today we shall be looking at types of charts. Sorry, I'm posting lesson 8 late. It's because I've been very busy this week, so please bear with me. So let's continue. Types of charts. There are 3 types of charts that we use. On your platform, you will see them. Maybe you are using MetaTrader 4. If you are using MetaTrader 4 for your analysis, you will see them there. You can choose anyone you like. But before that, let's talk about them. The first one is the line chart. The second one is the bar chart, while the third one is the candlestick chart. Those are the 3 different types of charts that we have. Now, line chart. A simple line chart draws a line from one closing price to the next closing price. When strung together with a line, you can see the general price movement of a currency pair over a period of time. You see, in a line chart, it's just the drawing of line to represent the price movement. The line moves. It moves up and down, joining the opening and closing prices together. So it moves up, down, up, down. That's a line chart using lines. It uses lines. I will show you an example before we finish. And the second one is the bar chart. Bar chart. A bar chart is a little more complex. This one is a little more complex. It shows the opening and closing prices, as well as the highs and lows. I will tell you what we mean by highs and lows. The line chart does not show highs and lows, but the bar chart shows you highs and lows. The bottom of the vertical bar indicates the lowest traded price for that time period, while the top of the bar indicates the highest price paid. I'll show you the bar now. The vertical bar itself indicates the currency pairs trading ranges as a whole. The horizontal arch on the left side of the bar is the opening price, and the right side horizontal arch is the closing price. Here is it. Look at this is the bar. You can see. See, this is the high. This is the close. This vertical, this horizontal, this small horizontal line here is the close. Then here is the open. It's open here. What do we mean by open? Where price started. That's the open. So after it opened, it went down a bit. Then started moving up again. That's why we call it low. Low is the lowest point price went to. The lowest point price went to in a particular bar. So it went down, then it started going up. It went up. Let me see. Let's see, for example, price opened here. Price opened here. This is where it opened. Then it went down a bit. But it didn't stop there. It started going up. Went up. Then it came down again and closed here. That's the logic behind it. It closed here. So here is the close. This is where it closed. It went this high and came back. That's why we call that the high. This is where it started, which is the open. And this is the lowest point. I hope you can get the logic now. It started, price opened. Here is the open. Then it went down. That's a low. But it didn't stay down. It started going up. It went up to this high. Went up this high. That's the high. The highest point it got to. But it didn't stay there. It didn't close there. It can close there. But in this case, it didn't close there. So it went down again. Then closed here. That's the logic behind it. Once you understand this, you will be able to know what price is doing. Once you open your chart and you look at the chart, you look at each bar, you will know what has happened. So you don't need to cram anything. And it can also happen in another way. Price can open here. Price can open here and goes directly up and close there. This is also another way. In this case, the opening price is also the lowest price. Why? Because it didn't go down again. Immediately it opened, it started going up. And immediately it closed also. No, it closed at the highest point. See, in this case now, here is the close, here is the open. So it can happen in any way. Now, what am I explaining now? I'm explaining a bar chart. I'm explaining how a bar works, how a bar moves. Now look at this is a line chart. You can see lines, different lines. You can see the movement using lines. That's a line chart. Now, bar charts are also called OHLC charts. OHLC charts. Why? O means opening price. H means high. O means open. H means high. L means low. While C is the close. Because they indicate open, the high, the low, and the close for that particular currency. As I've explained before, the open, the little horizontal line on the left is the opening price. I've explained that before. High, the top of the vertical line defines the highest price of the time period. Low, the bottom of the vertical line defines the lowest price of the time period. Then while the close, the little horizontal line on the right is the closing price. I've explained this before. Now, let's go to the third one, which is the candlestick chart. And this is the one most traders use. Most traders use candlestick charts. I will tell you the reason as we move on. Why most traders use candlestick charts. Now, candlestick charts show the same price information as a bar chart, but in a prettier graphic format. Candlestick bars still indicate the high to low range with a vertical line. However, in candlestick charting, the larger block or body in the middle indicates the range between the opening and closing prices. Traditionally, if the block in the middle is filled or colored in, then the currency pair closed lower than it opened. Look at it. Look at these two candlesticks here. Why do they call it candlesticks? Because it looks just like our normal candlesticks. That's why they call it candlesticks. And the thing actually it evolved from Japan. That's why we call it Japanese candlesticks. They call it Japanese candlesticks because that was where it evolved. Now look at this white one. Look at this black one. So you can use any color. You can use any color. So the main, like your MetaTrader 4 now. Once you install your MetaTrader 4, the bullish candlestick, we will see it in white, while the bearish. When I say bullish candlestick, that means the buy. When I say bearish, that means the sell, the one that indicates that price is going down. When price is going down, you say price is bearish. When it's going up, you say it's bullish. Bullish. No, a bull. That's from the word bull. Like a male cow. A male cattle. That's bull. Then bear. Now, look at this white one. This is the real body. It's open here. Just like I explained the other time. It's opened here. It's open. But it didn't go up first. It first of all went down. It went down. After going down, it didn't close there. It started going up. Let me do it like this. After opening, it went down. So, but it didn't close there. It started going up again. Started going up. But this time around is a candlestick. It's going up. Going up. Sorry. It opened here, went down, and started going up. Got to this very place and came down again. I may not be able to explain to you in a drawing. Assuming the market is open now, I will show you the way the candlesticks moves up and down, and you can also check it yourself. The way it goes up and goes down. So, what am I saying? The lowest point at which price went is the low. It started here. This is where it opened. Where price started is the open. Now, it first of all went down, so that is the low. Then it went up to this very place. This is the highest point price went to. But it did not close there. So it came down again. So, and closed here. Now, this is a bullish this is a bullish candlestick. This is a bullish candlestick. Why this is a bearish? This black one is a bearish candlestick. As I told you, you can use any color. But mostly, people use white and black. So, and people also use green and red. They use red for this one, while they use green for this. When I finish, I will show you a candlestick chart. So now look at this. This one is a bearish candlestick. A candlestick indicating that price went down. That's a bearish candlestick. And it always open up. See. You can see the open here. Here's the open. It opened up. But after it opened, it went up. But it didn't stay there. So it went up. That is the high. The same high. They have the same high. They have the same low. The only difference is their opening and closing price. So for a candlestick indicating the price is going down, the opening price will be up, while the closing price will be down. Why? Because it's going down. But the one that is indicating that price is going up, the opening price will be down, while the closing price will be up. That's the logic. You don't need to crown it. So it opened here and went down because it's going down. it went down up to this very moment, which is the low, and went up again and closed here. That's the logic. And as we proceed, you will see different types of candlesticks. It may not be like this. Some will be very long like this. You won't see any shadow. You can see that this is called shadow. This is called shadow. 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 It's called shadow. Some people call it wick. You can also call it wick. You call it shadow. So the one up is the upper shadow, while the one down is the lower shadow. Same thing here. The shadow. Why? Why is it called shadow? Because it's not the real body. You can see the real body. See the real body. So unlike the bar chart, unlike the bar, you see that one looks like this. So that's the candlesticks. If the close is above the open, we can say that the candlestick is bullish, which means that the market is rising in this period of time. Bullish candlesticks are always displayed as white candlesticks, as I told you before. Some people use white, some people use green. Most people use green. You can use blue. It depends on you. You can even use red. That is your decision. So you can use any color you like. The most trading platform use white color to refer to bullish candlesticks. But the color doesn't matter, as I told you before. You can use whatever color you want. The most important is the opening price and the close price. If the close is below the open, you can say that the candlestick is bearish, which indicates that the market is falling in this session. Bearish candles are always displayed as black candlesticks. But this is not a rule. It is not a rule. I've told you before. You can decide to use any color you want. There is no particular rule. It depends on you. I can decide. Most people use red for bearish candlestick. That's a candlestick that is going down. But me, I can decide to use red for a candlestick that is going up, so far I understand what I'm doing. So it doesn't matter. So now we shall come to the end of lesson 8. The next class, which we are moving to the candlestick patterns. So the candlestick patterns, there are different types of patterns. It is this pattern that makes you to know what has happened in the market and what is likely to happen next. It tells you what people did in the market, the candlestick patterns. So once when you open the chart is communicating. It tells you what has happened, and it tells you the behavior of the traders, so you know what to do next. So it is the candlesticks that tells us more about That's why most traders use candlesticks. So that's what we'll talk about in the next class. And please make sure you subscribe to my channel if you are new. Like this video, subscribe, and hit the notification bell so that when I post the next video, which is lesson 9, which we are going to talk about the candlestick patterns, you will be able to get the notification. Thank you very much.